Welcome to another episode of Healthcare Connections podcast, powered by Healthcare Compliance Pros. I am your host, Jeremy Winn. Our purpose for this podcast is to introduce you to key topics and experts in the healthcare industry to ensure you have what you need to successfully manage your practice. Please subscribe and follow us on our social media channels to make sure you don't miss any new episodes. If you have recommendations for guests or topics for this podcast, email me at jwin@hcp.md. With that, enjoy this episode of the Healthcare Connections podcast. Hello and welcome to another episode of the Healthcare Connections podcast. I am your host, Jeremy Winn, the Director of Sales here at Healthcare Compliance Pros. We've got an awesome guest on today. We have Tom Cunningham. He is the Director of Business Development at Physician Growth Partners. Tom, welcome to the show.
Glad to be here, Jeremy. Thanks for having me.
Yeah, absolutely. Why don't you give our audience a better introduction? Would love to get to know kind of your past history, what led to you being at PGP, as you call it, and yeah, I think it'd be good for the audience to know.
Yeah, happy to dive in. So, Tom Cunningham, as you alluded to, Director of Business Development for PGP. We are a healthcare investment banking and M&A advisory firm, really purpose-built to help advise physicians and founders and owners of kind of medical practices or healthcare businesses, advise them on transactions, exploring what's next, strategy, scale, succession planning, all of that good stuff. I've been with the firm now 2 years. Really, the bulk of my background, though, that kind of led me to PGP was in the medical device space, working with physicians in and out of the operating room, right? Bringing them
Yep.
devices, so helping them treat patients better with either devices or software platforms. And now it's exciting because I get to help them on behalf of PGP, kind of strategically thinking about what's next, helping them compete, helping them strategize on how to kind of optimize their operations, become more efficient, and all that. So, and oftentimes can be by way of a kind of an M&A transaction.
Yeah,
But yeah, happy to be here and happy to dive in here.
absolutely. So let's just start on that first point. Let's talk about some of the strategies and the best advice you can give to these physician owners as they look to grow and to scale their practice. Let's just jump right into that main topic.
Yeah, I think the number one point there in terms of growth and scale is when you think about healthcare, really any business, but more so like physician practices.
Mm-hmm.
There's three stages, if you will. One is the founding of a practice, right? Doesn't matter if it's orthopedics, dermatology, cardiology. There's usually some entrepreneurial physicians who either
Yeah.
started out solo or kind of went to a few friends and said, "Hey, let's start something," right? That's
Yep.
A. B is the kind of strategy and scale, right? The strategy around that is really kind of aggregating resources and having like-minded physicians, um, in a room, creating a board and making decisions around that. And then I think the third phase, which would be sort of this succession or exit, is really based around. We'll dig into this later, but really around uh, the optionality of we built a practice. Now what? And instead of being
Yeah.
65 or 70 and reaching out to PGP and saying, "Hey, we want to sell our practice," like starting much earlier is a much more suggested recommendation based on just longer term thinking. But strategies, I think what I was going to say is from a strategies perspective is it really starts with an inflection point of growth, and it's like
Yep.
where we're we're either explosively have a growth trajectory and/or we're slowing, and why is that? And we're entrepreneurial, we've done well, and so either one of those factors will cause typically them to look at the numbers and reach out to us and kind of have a strategy discussion around that.
Yeah. Do you have an ideal time frame? Earlier is better. I mean, I know that, but let's say somebody comes to you. What window do you like to have to successfully put these strategies in place and say, okay, to get to
the optimal exit, whatever that may look like for them, this amount of time would be really helpful for PGP to get involved.
Yeah, when you think about if you reverse engineer this process, so like, you know, PGP has advised over 70 medical groups across all specialties, more than
Hmm.
any other, advisory firm in the space. And so if you think about all of those transactions, they're all unique in their own right, but they've all started, call it, 4 to 6 months prior to the transaction, all the way up to, you know, 2 plus years, right?
Okay.
Sometimes three
Yeah.
years.
Yeah.
So there's really no laser kind of like silver bullet of like, hey, you should start thinking about this, here if you want to sell in 2 years. But what I would say is when you reverse engineer it, the transaction process, once we are hired to advise a group on a process, it's usually around, you know, 4 to 8 months, depending on,
Yeah.
how many shareholders, the complexity of the transaction, how many interested parties are there, and how many, and kind of what that looks like. But yeah, I'd say the process itself, once we are hired, is kind of 4 to 8 months, sometimes longer if it's a much larger group selling to a large
Yeah.
entity. If
Okay.
it's a couple shareholders, and it's could be pretty rapidly, move pretty rapidly.
Yeah. Yeah. Let's talk about the other piece. You mentioned your help around succession planning. Obviously, that's a big part of, when a decision is made, by owners of a practice that they are going to have a transaction of some sort. Um, a big part of it is them thinking about what does it look like for them after a transaction. So maybe talk about some of the scenarios in succession planning. What are some of the options? What have you seen out there? Um, for these groups, and how you just come in and support them and help them make some of those decisions.
Yeah, I think succession planning is that second. You have the strategy and the founding. You have this, kind of the scaling effort, right? And then it's succession planning really comes into what I would bucket into two buckets. One is uh, looking at it from the lens of what the business or practice will look like in 5, 10, 15 years.
Hmm.
And oftentimes that's, the founders thinking more about, do we want to keep this just a small family practice type of thing, or do we want to have a larger share of the market, patient volume, et cetera. Um, so one is that, and then two is is really helping our clients. So right now we have a number of clients across different specialties who have like what we would call a multi-generational cap table, right? So there's a bunch of
Yeah.
shareholders. There's kind of the off-ramp surgeons or providers who are kind of well, doctors sometimes hate the word providers, so we'll say surgeons and physicians. On their off-ramp of their career, kind of in that 3 to 5 years towards retirement. Then you have sort of the mid-career physicians or shareholders. Then you have the younger shareholders or earlier career, let's just say, who are like, what is this and what does it mean and all that. And so our role as we kind of go up market and help larger groups is really helping them navigate that. And how do you make it, realistic and fair for all parties, right? Even the
Right.
junior associates who are just starting out, like there has to be an incentive for them to continue and be on kind of a partner track, right? Since it is an entrepreneurial group. But yeah, I'd sort of probably bucket in those ways.
Yeah, absolutely. I mean, it makes sense, in a complex scenario like you mentioned. Each of those, as you described them, each of those groups maybe have different goals with a transaction. So how do you navigate that? That can get really complicated. And so having some experts like you and PGP come in and with experience, in the past, navigate some of those scenarios and come up with options and ideas. I could see the benefit of that for these practices. Yeah, love that. So as we record this, we're officially halfway through the year, which is, crazy. Time, I think we all recognize that every year it seems to go faster. Um, but the market, it's been an interesting year in the healthcare M&A market. So much excitement, I think, towards the end of last year and leading into this year. And then you read various reports where it's been slower than expected, but maybe some larger deals potentially have happened. I'd love where you've seen it, on your end, with the market through the first 6 months, and then, can you put in, your crystal ball and, what are we anticipating for these next 6 months?
The crystal ball question, right? If any of us had that, yeah, that one. Well, I guess I'll table that for the end. But as far as like market, I guess what I would do is kind of three things, right? One is sentiment, two is actual market activity, and three is, I guess, what I would say is sort of this physician practice management space. Shed some light on that since we're obviously
Yeah.
live on that. And so sentiment from the investors out there, it's sort of a dichotomy at this point between the investors who focus on healthcare are still rather bullish on physician practice and healthcare services. However, the flip side of that is folks who are not really experts in healthcare and or aren't heavily invested already are sort of shying away a bit because naturally there's headlines around, the percentage of private equity in healthcare and is it good or is it bad, and for doctors, patients, et cetera. So sentiment is still positive for folks who like this is all you live and breathe, like PGP or on the other side of transactions, right? On the PE side, for quality assets and good practices and businesses, there's still a lot of positives out there. The second piece is, I'd say, more from from our lens perspective, like deal flow, if you will, right? Healthcare investment bank, M&A advisory firm. It's there's deal flow and it's up or down or kind of neutral. Ours is still growing year over year. There's still no shortage of interest. It's just kind of matching, finding the right partners who are the best fit for our clients, whether it's culture, vision, values, all those things. And so naturally that, when you go from 300 potential parties a couple of years ago, when the market was frothy in 2022 to now, maybe 80 to 100 potential partners. And then we have to help you figure out who the best 4 to 8 are.
Yep.
That's going to take naturally a little bit longer. And then three, the crystal ball, I think from our perspective, when you look at it, you mentioned mid-year versus, going into the year. Going into the year post-election, right, everybody was a bull. Like, it's like, where are the bears, right? If you read a headline going into 2025, it was like, oh, there's going to be record-breaking M&A in healthcare. Well, as with anything, two rose-colored glasses, like that was not realistic. And here we are, post tariffs and not just tariffs, a variety of other things, lending, interest rates, right? Things are a little more volatile and rocky than anticipated. But that being said, our sort of expectations going forward to kind of close out this year and into 26 would be similar to the start to the year. Things are a bit rocky, but at the same time, a number of our clients right now that we're negotiating on their behalf with potential partners are very healthy practices. The enterprise value of these businesses continues to be healthy, and it's not record breaking of 21 and 22 because of those were kind of unforeseen circumstances out there, right? Cheap money, throwing it at anything that was interested in selling. Whereas our job now is really helping navigate, true quality partnerships that are going to last. So without giving any specifics or on expectations, I think it's going to be rocky, but it should be sort of maybe a muted year over year, with 2026 probably a slight bump in activity overall. Right. But all of that, I would just round it out with this, is also buoyed by recent strategic transactions where Cardinal Health and Cencora and some of these major distributors, McKesson, right, is continuing to invest in kind of the physician practice space, which which bodes well for our clients long term, right? There's
Yep.
other optionality from a strategic partnership perspective, and it doesn't mean you have to choose those parties, but it's helpful to explore and have those options and understand,
Yep.
why or why not, right?
Absolutely. Are you seeing certain specialties maybe rise to the top of interest from buyers? Um, like I know urgent care's had a rush and a boom. I think dental's had a rush and a boom. I mean, med spa aesthetics seems to be, maybe in the boom right now. But I'm just curious if there's certain specialties that you're seeing, gain more interest from parties.
Yeah, I think you have kind of the legacy specialties that have already had a lot of M&A, like dermatology and eye care, um, continue to maintain the interest out there. So it's still there. It hasn't kind of decreased. It's just the interest from a quality practice and digital footprint and patient reviews and all of that matters more now than ever. So
Yeah.
there's still a ton of interest there for dermatology, eye care, um, urology, etc. But I'd say where we see the newer interest, if you will, is just more what we would bucket into, you know, complementary service lines that are not just reimbursement driven. So whether
Yeah.
that's value-based care, whether that's retail health, whether that's, like to your point, medical aesthetics or kind of wellness.
Wellness. Yep. That's the big term out there. Yeah.
Yeah, there's
Wellness.
some,
Right.
yeah,
Yeah.
exactly. Well, it's a huge term, but what does that mean? And I mean, ultimately, it's go shop at the grocery store around around the rectangle of it, right? Eat healthy, like that. That could be wellness, right? On this, at the same token, it could be there's GLP-1s, there's
Mhm.
bariatric surgery. One of the newer spaces is like longevity medicine. So we're doing some market research there that'll be coming out here soon around kind of that world and how that plays in. There's been a couple new platforms pop up in that space. So yeah, I'd say combination of your usual suspect specialties that are still a lot of interest out there, and then sort of the medical wellness or kind of retail.
Kind of the non-reimbursed area, right, where you can kind of spread out your maybe some of your risk right out there. Getting away from reimbursements. Yeah, those services. Okay,
Yeah,
love that.
yeah.
Well, Tom, thank you. I appreciate the insight. For those that anybody that wants to interested in reaching out, connecting with you, potentially, looking at ways to work with you, what's the best way to get connected?
Yeah, I'd say just email is easiest, right? Just shoot me an email if you're a founder, owner, medical practice, or industry like yourself or others who are just have mutual clients, right? That we can trade notes on and be helpful. Yeah, my email is just tcunningham@physiciangrowthpartners.com, all spelled out. It's a long one, but 3
Perfect.
character websites. It's probably unavailable in 2018 when Michael and I
Absolutely. Yeah.
started the firm. So.
Okay, Tom. Well, it's been good to have you on. I appreciate it, and yeah, look forward to additional conversations that you and I have in the future.
You bet. Thanks, Jeremy. Appreciate it.
Thank you for tuning in to this episode of the Healthcare Connections podcast. For more information on the topic we covered today, you can reach out to me or to our guest. For any additional information on healthcare compliance pros, feel free to email me at jwin@hcp.md. Don't forget to tune in next week. Thank you.